Okay, I just want to jump on and give a quick overview of the SMCY Yield Max Fund. Part of this is to cover how it's been doing in the past, and part of it's because I just gave an update on its distribution, which came out today, as you can see on the main YieldMax page here. Once it loads, if we go to Group D, it is part of the YieldMax Fund group. It announces distribution today. Trading about 16.61, announced a dividend of $1.31 for a 7.88% yield on the month. That said, I have it covered specifically on its fund page here. Originally, I did announce that from a component perspective, I just wanted to note, this was not refreshed. It was a couple days old. It's now refreshed. So this is the actual look at SMCY. But to start off covering the fund from its basics, here's SMCY. It initiated in late 2024. When it initially came out, the SMCI underlying stock was doing quite well. But then right when it came out, let's see, in late 2024, the stock price fell drastically, thereby taking the $5,000 investment for those who own the underlying equity from $5,000 down to $2,896. So not quite half, but almost half. It had a haircut about right after the SMCY fund came out. And for those who don't know, so the SMCY is based on the underlying equity of SMCI. They do trade somewhat together. SMCY sells calls on a weekly basis to generate premium to pay out a somewhat large distribution, whereas SMCI, taking a look here, doesn't pay a dividend. So SMCY, for those who are bullish on SMCI, super micro computer, but are looking for some income, some dividend exposure, SMCY has a synthetic where it buys a call and sells a put in order to basically simulate what it's like to own the underlying equity. It performs almost exactly like the underlying equity, that combination of options. And they can use that then as collateral to sell options against at higher strike prices to generate the income that they pay. So that's how they're structured. As far as how they've been trading, you can see here I have three scenarios. In yellow here, it's owning just SMCI. These all started with assuming an initial investment of $5,000. The reason it doesn't look like they started $5,000 is because that assumption is actually a month back. And this is when they first reported their dividend or their distribution, which they pay on a monthly basis. So a month in, it went from $5,000 up to $5,992 if you own the underlying stock, and it went up to almost $6,000 because they paid out a substantial first distribution per share. But following that, all the three scenarios of non-invested dividends here in red and owning the underlying stock went down substantially as the underlying stock took a hit. But since then, the underlying equity has been fighting back, and as you can see, that $5,000 investment, you're almost back to even about a year later, which of course, opportunity cost-wise is not the best. The YieldMax funds are still down a little bit. The reason being is when they sell those call options, or their synthetic does basically track what the underlying stock does. But when you sell the call options, generate premium, and you are capped on the upside. In the last year, Super Micro has had a couple very large up days or up weeks. During that run up, that drastic run up in a short period of time, the YieldMax funds were capped on the upside, therefore making them underperform the underlying stock currently. From a distribution perspective on SMCY, you can see here's the super large distribution they paid out initially. Given this fund started at $50 a share, so a distribution of $5.35 per share was over 10% for the month. And that said, once they took a large haircut, almost a half, you can see the distributions have all been over $1. $1.30 was the most recent here, and that's the lowest. They've been basically in the $1.30 up to almost the $2 range, but that reflects the smaller ETF price. So on a percentage basis, they're probably still paying decent, close to that 10%. Or between the 5 and 10% monthly. As far as an investor who invested in this fund, so this assumes since inception date. You can see that since inception date, they opened at 50 and they've paid almost a $25 distribution. That said, the ETF price has gone from, like it was 55 a month into it. It started at 50, went to 55. Now it's down to 16. So you've definitely had some erosion in the ETF value. That said, your total return, you're looking at 25 plus 16. Clearly below the 50. Looks like we puts us over 40, so we're down on the investment overall. But for those who invested following the decline, are up overall. And then the detail I wanted to jump into, because I previously showed it and it was off a bit. It was off by a day or two because I have these Tableau reports. I basically pull the data in, and for some reason this one wasn't being refreshed for a 2-day span. I did catch it though, so this is a slight update from a previous video where I was basically showing all the distributions from Group D. From a positioning perspective, SMCY, or maybe the first thing I'd like to say, is they do have their synthetic, which gives them the option to write calls against 76,436 contracts, or it gives them the right to do that. But they've written calls against all those, so 100% usage. And that said, they're employing a credit spread method where they sell a call, then they buy a call at a higher strike price. What that does, it creates a upside call option that if the stock does run very fast to the upside, they don't lose out on all that upside. I guess they're capped for only a portion of it. So you can see SMCY is at 44.47. If you were to sell a 50 and then buy a $53 call, you would not capture the gain between 50 and 53, but above 53, you can capture an upside again. So for 81% of what they sold, they do have upside credit spreads bought or upside calls bought, thereby creating a credit spread on 81% of their positioning or their calls that were sold. And you can see these right here. The credit spread starts, they bought them at different strike prices, but it starts at 47.50 and goes all the way up to 49. These, of course, expire at the end of the week. So if the stock doesn't get there, these all expire worthless. And that said, on lower strike prices, they have calls that are sold. So the calls that are sold are negative. The calls that are bought are positive. Here's your zero line. The stock's currently trading at 44.50 almost. They did write some calls at 44, so those ones are capping upside. You won't be able to capture upside beyond there. They also wrote calls at 44.50, so we're almost right there. And then they got more calls written at 45, and then finally some at 46. So once you pass 46, there is no more upside for the fund for the week. That said, your synthetic goes up, but you start losing money on some of these calls that you sold. When I say you lose money, what I mean is the call that you sold, it becomes more negative in value. So it would take more money to buy it back. That said, your synthetic goes up by almost an equal amount. So you're net zero once you blow by it. But if it does run, let's say it runs up to 50 or 55 a share by the end of the week, all these calls that are bought would allow you to gain upside again. Currently, from a fund makeup perspective, it's trading at 1668 exactly. Last time I ran this was at 1665, which is made up of three components. It has its cash value of $19.29. And it's got two components that are acting as a negative on the ETF value. That's their synthetic, which is currently a negative $2.34 drag on the fund. And then the weekly calls they have sold actually as a negative 30-cent drag on the fund at the moment. As the stock price moves and the probability of whether the strike prices are hit or not moves around, goes higher or lower, these amounts adjust on a daily basis. Whereas the cash value, it only adjusts when calls are either bought or sold, respectively. And then I only got about 5 days of data from a time series distribution, but what I'd like to do down here is I'd like to do a time series chart of this, basically. So you can see here the cash value is 1929. If we go down here, you can see the cash value is 1929. So it shows you how the cash value is adjusting over time. So in the last 5 days, it went 1924, 1927, 1934. Then it actually went down to 1929, and we're still at 1929. Usually as they sell weekly call options, their cash value will go up slightly, but it should add up over time, over a 4-week period. And then when distributions are paid, of course, the cash value declines or whatever the distribution is. So with that recent distribution, I believe it was $1.30. Let me just check that quick. I believe it was about $1.30, $1.30 or $1.31 a share. So the cash position will go down by $1.31 per share. And this blue line here is basically the cash plus the current contract sold plus your synthetic. All those added up to make this blue line. When the cash goes down, your ETF value will, of course, go down with it. But as more data is captured, it's interesting watching how these components move. And you can see how the fund managers are using their cash in order to grow it by selling calls or use some of the cash at times, either pay a distribution or sometimes restructure where their synthetics are situated or where their weekly call options are situated. In the case that the stock price of SMCY goes above where the calls they have sold at. And then this is another way to look at it. This is all on a percentage basis. So you can see like currently 100% is what the value of the fund is. But in this case, they have more cash than the fund is worth. So they have, what the ETF is right now, 115% of that value is in cash. But a negative 14% is from the synthetic and a negative 1.8% is from the contracts they have sold at the moment. SMCY, we'll continue to watch it going forward, see how it does. Overall, it hasn't been a great investment. But they are employing the credit spread methods. If there are huge gains in the stock, hopefully they can capture upside. Hopefully we can see this total return chart keep going up over time. And then on a daily basis, I do like to update the positioning of the fund. So we'll track this accordingly. But right now, just for the week ahead to the 29th, once we get by the 46 strike in the fund, if that happens, just as a note between that and the 47.50, the SMCI stock could go up and SMCY ETF will probably be somewhat stagnant or stuck at a neutral range because all the upside has been sold at that point. But that is how we can track it. Most of the calls are sold at 45, so we'll be watching that till the end of the week. But